We just have a quick question here from Jean-Pierre. I'll just call you JP if that's okay. Asking whether we would advise to trade into stop losses. And the example that JP gives us is to explain that let's imagine that we have a strong bias, whether that's to the upside or to the downside for an instrument. And when we reach a key technical area where we know that many retail traders will be selling from, whether it's a good idea to be buying into those type of levels. And I think this is a really good question, JP. This is certainly something that you can consider if and when the opportunity arises. I think if you have a look at the anatomy of a technical breakout, let's just take something like the S&P. The anatomy of a purely technical breakout is you often get that initial push to the upside and then just a massive acceleration after we break through a particular level. And I think that is exactly what's happening at those type of levels. Sorry, let me just put that down. So I think that's exactly what's happening at those levels. We know from looking at swing areas and just thinking about stop loss placement. Let's look at this level on the S&P and imagine that we try to trade through this particular level. Let's maybe move that up technically a little bit. So imagine that we try to trade through this particular level. We know that many traders will be having stop losses, just above that type of level. They would like to anchor their stops above these swings. So when you are approaching these key areas where you think that traders might be, keeping their stops, and you have that particular bias for the instrument to continue, that can give you some additional momentum to trade. If these stops are taken out, you should see that initial push to the upside. So that can be something to trade out of that particular level. I think it will come back more so to the type of trader that you are. So more aggressive traders really like using or trading breakouts like this as they occur, and then to try and catch that initial jolt to the up or to the downside as the key levels fold. Personally, for me, I like the more classic breakout and pullback entry. So in this type of example, if we use the same one, I would much rather prefer waiting for the break than waiting for that classic breakout pullback re-entry type of entry. For me, I really like those type of entries, and the main reason for it is really simple, but it's twofold. Firstly, it usually gives me a much better entry from a purely level point of view. So instead of entering, let me just take this thing down. So instead of entering right above the level or right on top of the level, you normally get a chance to get a much better entry on that second move to the downside, apart from waiting for the stops to fold. So I like the fact that you get a great entry, and the retest and the continuation of that move is a pattern that I've often associated with more confirmation that a specific area is really important from a technical point of view, because you mark out the level, it's a significant resistance, but this type of pattern for me is just that confirmation that, okay, it's you have the right level in mind, the market is rejecting from that level as anticipated. So I really like that, but that's from a more conservative point of view. It's really just the way that I like to approach the markets, but absolutely nothing wrong with that type of a strategy, trying to capitalize on that push to the upside as the stops get taken out. I think a good example recently on that was on the euro US dollar. Let's just quickly open that up, where we had that key break off that 111.50. Yeah, there we go. So we had that key level at 111.50. And this was just a classic breakout from that key level, and we saw it accelerate as we broke through that level. It just boom, broke through the stops, took a small breather, and then just accelerated to the upside. And unfortunately, with these type of entries, unless you looked at that as the new floor to pull back to and to re-enter, with a breakout pullback type of entry style, you're probably going to miss that type of entry. So this is a good example of when that type of thing will work, because it's a key level. Lots of traders will be looking at it, and the moment that thing falls, you just see that acceleration to the upside. Same happened to the 112 as well when we had that break. So lots of traders obviously looking at these levels. So I think it's a great strategy to incorporate. Coming back to the question, I think it can be interesting approach that you can take, especially if it's levels that the market is going to be focused on. So, for example, you'll often hear the analyst on the squawk citing key technical areas that the tech traders are focusing on. So, using that info to your advantage with this type of strategy can be something quite interesting. So, if you are going to trade that way, please keep us up to date. Let us know how it goes. So, I hope that helps with the question. Any other ones, please don't hesitate to let us know.